Hi everyone, welcome back. I thought this week I would break down the S&P 500 through Elliot Wave Theory and give you my take of where I think we're headed. So, Elliott wave is a form of technical analysis using wave counts to establish and forecast trends. So first I wanted to start off by looking at the monthly time frame. In 2009 is when we started the recent bull rally, and for 11 years we've been grinding up. With Elliott wave, there's an impulsive wave and then a corrective wave. So the question is, have we completed the impulsive move and are headed for the corrective wave, or does this impulsive move have more room to go? So first let's talk about what I have here. I have that we've completed the 5 waves up. However, there is a theory that we just completed wave 4 here and that we still have room to go to complete wave 5. So there's 2 scenarios here. One scenario is that we've completed the bull run and are in the corrective phase, and then the other scenario is that we've just completed a minor corrective wave and still have room for the bull run. My hunch is that we have completed the bull run. And the reason why I think that is just based on the fundamentals. Unemployment is high. Basically, the feds and the government have to bail out all so many companies. We've got the stimulus package. There's a lot going against this bull market. So I feel like this would be the opportunity for the bull market to take a breather, and we have the corrective phase. That's my theory. So that's assumption number 1. The next thing we have to look at is that if this is a corrective phase that we're in, is the correction going to be a zigzag corrective pattern, or is it going to be a flat corrective pattern, either expanded or running flat or a regular flat, or is it going to be a triangle correction or a combination correction? We actually really don't know. So I'm just going to give you my thoughts of what I see in regards to Elliott wave and the market. That way we can better manage our trades and limit our risk. I actually want to go back to the monthly chart. So if this is the completion of our recent bull run, we need to figure out how far the correction could go. How far down can we go? And to do that, I like to use the Fibonacci retracement tool. So if we draw from the high that we recently made to the low of when the bull market started, we have our Fibonacci levels, which could act as support levels. So as you can see, we've already hit the 382 level, but that doesn't mean that we can't go down further. For example, we could have a correction where it's a zigzag and we go lower to, for example, the 618, or maybe the correction turns out to be a flat and the 382 is as far as we are going to go. It all depends. We really don't know yet, but it's good to have these levels in the back of our mind just so we can see how far this correction can go. I mean, we could have a flat, we could end up having an expanded flat, we can have a triangle. We really don't know, but it's good to have these levels in the back of our head so we know how far we can go. Alright, so let's talk about what we have right now. So if we're in a correction, what kind of correction do we have? Do we have a zigzag, like I mentioned before, a flat that maybe looks like that, a triangle, or a combination of these? We really don't know. So what we want to do is look at what we have so far and try to figure out where we could go from here. Off the bat, we've had this recent fade all the way here, and I feel like I can clearly see 5 waves going down. And now we've recently pulled back, and I feel like I can also see clearly 3 waves. And now with a zigzag pattern, we normally have 5 waves going down, 3 waves correcting, and then 5 waves coming back down. With a flat, on the other hand, we have 3 waves going down, 3 waves going back up, and then 5 waves coming back down. Those are just 2 of the basic correction patterns. So as of right now, we might think that this is a zigzag pattern and that we are starting the next leg down to complete wave C. This would be A, this would be B, and then this would be C. Again, we really don't know, but that's one theory that we could work with. Another theory we could work with is that within the correction, let's just say wave A hasn't even been completed, and within wave A, there are 5 waves. So maybe this is wave 1, and then we're in wave 2, and then we've got to do 3, 4, 5. We don't know. So that's another interpretation that we could possibly be in. Let me give you another one. With a flat, we have 3 waves down, 3 waves up, 5 waves going down. So what if this was a flat? And this is actually the 3 waves going down. So we have 1, 2, 3 to complete wave A, and then we're going to have 1, 2, 3 to complete wave B, and so forth. We really don't know. To further add to the possibilities, let's just say we are in a zigzag pattern and we just completed wave A, and now we're in wave B. However, let's assume that this isn't the end of wave B, and in fact this is wave 1, and that we may even have to go up a little bit more, and then we go 1, this would be 1, 2, 3, then finish B to go lower and complete C. Again, we really don't know. So with all these possibilities, we have to establish what levels would make us pick one possibility over the other. And hopefully I can help with that. Okay, let's just keep it simple. Let's assume again that we're in a downtrend and that we just completed our 5 waves down. And now we have to have a correction of that wave, a small correction. We can either have 3 waves or 5 waves, depending on the scenarios that I mentioned before. So it's either 3 waves versus 5 waves. How do we trade for that? Okay, so I brought it down to a smaller time frame to see how we can trade this. And so far, what I can see is that we've completed 3 waves up. And the question is, again, are we going to head down now after completing these 3 waves? Or are we going to complete 5 waves and then head down? That's the assumption we're working on. So it's either 3 waves or 5 waves and then heading down. As far as our assumption that we are in a corrective phase, and those are our 2 scenarios that we're working with. Okay, so let's break it down even further. Let's trade as if we've completed the 3 waves and are headed down. What do we want to do? I would say that if we think that we're headed down from here, our stop has to be the high right here. Because if we were to go past this high, I feel like this trade would be invalid. That means that we are going to finish wave 5. So this would be my stop, entry around here, and then target down here. Potentially a 2-to-1 profit-loss ratio. I think that's a good trade because our stop is tight. If we were to get in here, again, this is over the weekend, so the market could open up way up here, way down here, we really don't know. But let's just assume that our stop is going to be here if we are going to be heading down. That would be our best bet to limit our risk. On the flip side, if you think that we still can go long and complete wave 5, you could possibly get back in on any pullback, maybe around here, and then have your stop at this line here, the highs of these candles. Normally, wave 4 does not pass wave 1, but if we have a diagonal, it technically could. So just because there's a lot of uncertainty, I would just to be safe, have my stop here if you think we could go higher. And I also think that we would probably get a pullback just because I don't think that this would be the full correction. I'm thinking maybe this is wave A, B, and then maybe we have C, and then if you do think we're going to wave 5, then, you know, that would be the interpretation that I'm thinking would happen. And again, a stop here would be a nice tight stop for a 2-to-1 profit loss ratio. So that's how I would play it if I think it's going to go to if I think it's going to go to 5 waves. However, I'm personally leaning towards that we've completed the 3 waves and that we're headed down. And the reason why I think this is because first reason has to do with symmetry. A lot of times wave A is equal to wave C, which is the case in this scenario. As you can see, right here would be a 1-to-1 ratio for A, and say this was B, and this is C. So A and C are almost 1-to-1. Second reason is that we're hitting the 50 moving average, which is this right here. And then third, we're coming up to, or we came up to some strong resistance. We practically hit this line to the penny, but just the fact that this resistance zone is pretty strong. I mean, we hit it here, this area here, over here, and then we gapped here, and then we hit it recently here. So I feel like this is strong resistance zone. And then we have the Fibonacci retracement. We're in between the 50% and the 61.8%. So there's a lot of resistance in this area. And then just the fact that the news is not helping. I mean, with unemployment, we don't have a vaccine yet, company bailouts, there isn't any really reason for us to go bullish in my mind right now. I just feel like the risk reward is more to the downside. Even if we did go to wave 5 up here, I just feel like there's limited potential going up from this area here. I think there's more potential to go down. So that's why I'm leaning towards fading this area here, and keeping my stop at the high that we just made, hitting this line right here, the high right here. That would be what I'm looking for as far as a trade goes to the downside. As always, anything can happen, especially this week. We have a lot of big companies reporting their earnings, such as Apple, Amazon, Microsoft, Google, Caterpillar, Boeing, just to name a few. So it's important to have an exit strategy in case your trade does not work out. But as of right now, I'm bearish on the S&P 500, and those are my thoughts of where I think we're headed. If you like this video, please give it a like and subscribe, and leave a comment down below what company you're looking forward to as far as their earnings go, and what trades you're looking for this week. And again, see you in the next video.